Hey guys, welcome back to another week of Looking Beyond the Dividend. Today we're going to travel out to Vancouver, British Columbia, and we're going to discuss Telus Communications. There's many out there that are a little down on Telus given its 2022 overall performance. At the same time, there's quite a few folks that are looking at Telus as an opportunity. Yeah, Telus might be considered that boring old cell mobility company or even that boring old internet provider. But I'm going to pass along some information to you today and let you make a decision for yourself. And as the old saying goes, this isn't your father's same old Telus. Stick around. Before we get into the discussion on Telus, I'd like to take care of a housekeeping item if I could. The response I've had so far from this channel has been nothing short of incredible. And I want to thank everyone out there for subscribing, those of you that have, as well as interactivity on my videos in the comment section. It truly is appreciated. And I wanted to let you know that moving forward, I plan on coming out with 3 videos per week. Every Sunday at lunchtime, every Wednesday at lunchtime, my plan is to bring out full 5-minute or more videos. As well, every Tuesday at lunchtime, I plan to come out with just a short video. And at this point, they're all discussing stocks and the stock market. If you have any suggestions of other things you'd like to hear or see, I would please welcome you to comment down below. I also plan on bringing out other material, and I hope you appreciate it as well. It's going to include things like backyard grilling, as well as the beautiful Huron County in Grey Bruce, Ontario. Thanks. So why is everyone down on Telus? Well, they didn't have the greatest of years in 2022, but as I said in the opening, there's always a lot more to the story, and the challenge for us is often looking what that more is. In 2022, Telus had a very high dividend payout ratio of 120+% of their earnings. The share price overall was down by 5% in 2022, and they are in a sector that they've got quite a bit of competition, not a lot of competitors, but heavy competition. In British Columbia and the West Coast, they have Shaw, and across Canada, they have both Rogers and Bell Canada. And Rogers and Bell Canada are both currently trading at 2+ times the share price of Telus. So you might be asking yourself, why then would people be excited and looking at Telus as an opportunity? Well, that's what we're going to get into next, and there's quite a bit. One of the first things that I like to look at in a company is how stable is the business. There are some things that a company can't control, like the economy. Telus is in a great position, given the services that they offer, that regardless of the economy, people are always going to need telecommunication services. And for the most part, people are always going to need internet services as well. So depending on how the economy goes in the coming years, I'm not too concerned about Telus's business model and whether or not they'll be able to continue to make money. The other thing, and I've talked about this in a few videos of late, I love to see companies that are diversified in their revenue streams. And that's one of the things that I think Telus really has a leg up on its competitors. Companies like Bell and Rogers pay out a very nice dividend, and they do reinvest a portion of their profit back into media services. Telus, on the other hand, has expanded out into the agriculture industries as well as into the Telus health industry. And during COVID, telehealth through Telus was actually quite a booming business for them. And that's something that they're continuing to expand on. The other thing that's really great about Telus is their history of dividend growth, combined annual growth rate. Over the last 10 and 15 years, it's been over 8, almost 9% in that time frame. And in the last 5 years, it's been just under 7% for a combined annual dividend growth rate. Very, very respectable. The other thing that I wanted to talk about is I mentioned earlier about their 120% plus amount of profits going out to cover dividends. The reason for that is that during COVID, and actually since 2000, Telus has been rolling out infrastructure upgrades and updates to its network. They are now quite possibly the leading 5G telecom service provider in Canada. Moving forward, they've pretty much got that all done. In 2022, as at the end of the year, they were 85 to 90% complete that 5G network upgrade. And so they've already committed to say that their capital expenditures in 2023 is going to be far, far less than it was in previous years. So that that payout ratio of 120% plus is going to be really, really reduced because they're not going to be putting the same amount out in capital expenditures. And my last point, in January of 2023, Telus made the purchase of Willow Tree, a full-service digital product provider. And they made that purchase for $1.2 billion. In reading a little bit deeper on that, this was a company that Telus was already working with for some of their own needs, and they decided to go out and buy that company and now offer those services as a part of their technology division moving forward. So another revenue diversification plus for those of us who are investors. So that's going to wrap it up for our analysis of Telus Communications. Remember, this has not been investing advice. Rather, this is just a stock that my wife and I have in our TFSA portfolios that we're quite excited about right now and moving forward. As always, if you've enjoyed this video, I would politely ask you to please consider subscribing by hitting that button down below. That's all for now. Take care, and we'll see you soon.